Hi again everyone. If this is your first video you've joined us on, there's two previous videos to this one. The first one we went through choosing a broker where we chose XE Markets and they had that really good deal for 100% of your initial deposit they would give you back as a bonus. And in our second video we went through setting up the MetaTrader 4 platform and understanding what all the different buttons do and all the custom indicators, and we created a template. So in this video I'm just going to go through looking at the candlesticks so you understand what you're looking at, and we'll make a trade and try and make a little bit of profit. So we'll start off with these candlesticks. If we look at this screen I'm on right now, you'll see you've got purple candlesticks and green candlesticks. So we'll start off on the green candlesticks, and what you'll notice, and we'll just zoom in on a few of them. So we'll look at this big one here, right? Oh, let's go back. There's this big green one here I'm clicking on. So the way to read a candlestick is you've got a real body, which is the solid green bit, that rectangle, and you've got wicks, which is this bottom little line and the top little line. Now essentially how to read a candlestick is, because it's green, we know it finished up. So that means it started. So at this point in time it started at that price there, the bottom of that rectangle. So I'll just draw a line for you to make it easier. Started there, it finished there, and throughout the day it also hit down to this point and up the top to that point. So I'll draw lines on that as well. So just go there and there. So that's a bull, what's known as a bull candlestick, and that means it's gone up, start there, finish there. So you had a good lot of movement. If we now look at the purple candlestick, which is a bear, that means that the price has, we'll just delete some of these other lines, it started at this red line and it will have finished at that red line. And so the real body is that purple rectangle with the black center, and the wick is this top bit and bottom bit. So it started here, went up to there, came all the way down to there and finished there. And so that's pretty much candlesticks. You can see the one next to it has a very, very small body, sort of starts at the bottom, starts at the top there, and went all the way up, came all the way down, and then finished there. You'll see all sorts of weird types of candlesticks. Some of the other type of candlesticks you look for are what's known as hammers or shooting stars. On this picture here you can see a hammer, and that's this little, I'll zoom in on it as well, this fella here, and it's a hammer because its real body is small. It's at the bottom of a downtrend, so it's a massive down, and you can see it's had a good lot of selling pressure all the way to a point, and then the buyers have come in and bought it all the way back up again, and then you're considering the next bit of the uptrend. So I'd expect this to probably carry up for at least a little bit and try and fill this gigantic gap here. So what's a gap, you're probably thinking? A gap is pretty much a spot between two candlesticks where there's black in the background and they don't meet. So if you look at this, there's candlesticks always overlapping each other, then all of a sudden you get this gigantic big lot of black where there's no candlesticks before you come back down here. That's a gap. Gaps normally get filled, and to fill that gap, this lot of candlesticks have to go all the way back up to that point there. So then there'd be no more gap. Okay, so you know about candlesticks, you know about the gap. So we'll look at trading now. There's a few different ways you can trade. One, you can drop down this little fella here and just click buy or sell, depending which way you want it to go, or you can go right click trading, new order, and you set your volume to be either 0.001, 8, depends how crazy you are. We'll just stick with 1 for now. So before you actually start trading, you need to work out which way you believe the market's going to progress. So I'm on the 1 hour at the moment, and to me it's fairly clear this gap needs to get filled and we're going to go up, even though we've gone down for the bulk of the day. I'm pretty sure, plus this hammer, we're going to go up at least for a little while. If we look at the 30-minute, it also looks like it's going to go up. The 5 minutes sort of already halfway up. Sorry, the 15-minute, the 5-minute, there's a bit more buying on there. It's probably a bit overbought now. See, the stochastics is up in that 80 range. Yeah, it could keep going though. And on the 1 minute, yeah, it's had a nice big up, so it should go down for a little while. I'd suggest it'll probably bounce off around there somewhere. Just to randomly choose no, that's not a random location. I should explain why I chose around here. I chose around there because we've previously had a lot of a period of consolidation along here before we continued our downtrend. And as we came back up, we sort of bounced off around that area before pushing through it. So it looks like a nice area where it'll bounce around. So I'd expect this to travel all the way down to not that far, just a little bit before it progresses back up again. So what we will do, we will wait for it for a little while. But we're going to be trading for a longer period of time. So I normally don't worry about what's happening in this 1 minute or this 5 minute area. I'm much more interested in spending time in the 30, 1 hour, 4 hour point of time, in which case I don't really care how much I don't care about these few little bits of movements. So what we'll do, seeing as we're fairly sure it's going to continue up, we're going to go right click, trading, new order. We go one volume and we're going to go buy market. Bonk. You'll hear that little noise, bonk. Essentially what that means is you've just bought that little green dotted line, which that red line's going over now. That green dotted line is the price we bought at, and that was due to the spread, the difference between the buy and the sell. If you remember, I spoke about that in the previous video. So that now means this grey line here has to go above that green dotted line before we'll make a profit. Now that might take quite a bit of time. It'll probably come all the way back before it goes up, or it might just continue pushing all the way up right here while I'm talking. While we're waiting for that to decide what it's going to do, I will show you how to place a pending execution order, or a pending order. What that essentially means is, I'll just close that. If we think the price is going to come down, say we think it's going to come down to around here, just to bounce off where it previously came down to, we could set a buy order and go, right, if it hits this point, I want to buy it because I think it's going to go back up again. So let's just do that. I'll just delete that. So we right click, trading, new order, change this to pending order, find the point you want, and we want it to be around 1.28. What is it? 805. So go 815, and we just go place. Now make sure the symbol's always on the right one. So we're doing Euro USD at the moment. You don't want to end up coming into the wrong currency. And see this little green dotted line come up. So that means now if the price comes all the way down to here, this particular order here that I've now just highlighted, it will trigger and we'll have bought just like we did up on this first one here. And currently on this first one we're down $13, $11, $7. Alright, we're moving up pretty quickly now. That could bounce around all day long, to be quite honest. It's actually had a very steep rise right now, so might not have been a good idea to go with the buy then. No, look, we'll wait and see. I'm not too worried. It's only a demo account. It's a pretty strong reversal at the moment. A lot of buying. So I'll pause the video at this point, and we'll wait for this to either make a profit, so we go above the green line, or this other pending order we've got down here to execute. So I'll pause and I'll talk to you again soon. Bye. Hi. As you can see, when we've come back, we've had a real big drop, and we've lost quite a lot of money at the moment. And normally, if you're trying to scalp or trade quickly, you'll have a stop loss or something, and you will have got out at that point. But I'm just going to show you another little thing that people tend to do. It's about averaging down your amount of money. So, seeing as we've lost a lot of money here, what we can then do is you can put another buy order. If we're confident it's still going to continue going up, put another buy order at say 2. Of course, we're on a demo account. Normally you'd only be trading for like 0.05, and then you put in an order of 0.10. But seeing as we're playing with 1, we'll put in 2, and you just buy the market again when you think it's about to turn around. Because I'm not too worried, we'll just put it in here. And what will happen now is we've got 2 orders. So when it goes up, it'll only have to get to about a third of the way up before we'll be back in profit again. So it won't matter if the price doesn't hit all the way back up here. Now, to do this type of a strategy, you need a much bigger bank than about your your 1,000, 2,000. I'd recommend more like your $10,000 range, so you can take quite a few hits along the way. Can be a bit iffy because sometimes the currencies can just keep going down, down, and down. But if you start off at a smaller enough base, so like 0.05 or 0.1, it won't get out of hand too quickly. But yeah, if you're playing with a volume of 1 like we are at the moment, you'd only really be doing that on a demo account unless you've got heaps of disposable income. Anyway, I'll pause it again. I just happened to look back at the screen and I saw an opportunity to show you about the whole averaging down, and we'll come back again later and we'll check it out again. Okay, bye. Okay, so we've just come back. You can see we've had a bit of an up here, and now because we've averaged down, we're actually in profit. So if I was to sell both of them right now, okay, we've just gone down rather heavily, but as you can see, we've got up to just that point there, and you're in profit. So we don't actually have to go above that line anymore. Just an interesting, different little way to trade. If you've got a lot of extra cash, so if the market moves against you, you can buy again a bit lower and then just buy back essentially. So just thought I'd show you that. I don't normally like recommending people trade that way. It can be super dangerous. I mean, we're now in profit right now by doing it, but look how quickly that just changed. Now we're negative again. Now I'm just going to let it run, just to show you that it was possible, and we'll see where it ends up. I'm fairly confident that we should go back above that green line anyway. Normally what you would do though, if you did do an average down like what I just did, when you do hit profit like this right now, you'd try and take your profit as quickly as possible, or at the very least take your... So we'll close this order. So to close an order, you right click on the thing you want, you go close, and then you go close. Okay, so we just closed the order then, and we made a bit of money. So if we wanted to, we could close off this other order up here, this top order, and we'd be in profit. So that was $82 minus the 47. We'd be ahead about $30. Anyway, we'll let it run for a little bit longer. We'll see what happens. But yeah, normally what I would do at that point in time, if I made money with both my average down amount, which we got down here, plus one at the top, I'd sell both and just take the profit, the overall profit, even though one of them was technically in loss. So I'll just pause it and we'll wait and see what happens. And we're back, and just because it's just gone a bit over, even though it's probably going to go a bit further, I'm going to cancel out now, just because I think you've seen enough about how to trade. And there we go, $8 worth of profit there. So as you can see, we had an $8 one and an $82 one, so we made $90 worth of profit just for trading that short period of time. We did most of it at 1 minute. As I said, if you want to go longer, see it's still going up, you really should be going more than 30 minute to 1 hour, and there's a really good chance that's going to progress all the way up, and we probably could have made $5, $8, even $1,000 if we wanted to. Anyway, that's pretty much all there is to it. If you have any questions, leave me comments on my blog. I'm on speakbank.com, and I'll talk to you next time. Okay, thanks. Bye. Hi again, everyone. Just wanted to come back and show you that we could have made a bit more profit if we would have gone with a more long-term view rather than just trading that 1 to 5 minutes, which we were doing just before. So I've actually come back about a day later just to show you exactly how much it could have moved. So if you remember, I said that this purple candlestick, this hammer candlestick here, was my reversal pattern from the big downtrend to have a bit of an up to try and fill this gap. So it was around there, and we ended up selling out around here. Now if we would have left that, because we're only trading a very small period, we were only in between these two little red lines when we put in our trade before. If we would have left it, we would have had all this range up here if we wanted to. And now the way I normally trade is with this sort of 1 hourly to 30 minutes to 4 hours, anywhere in those three time frames, and I'll leave it go in a constant. If it's in an uptrend, I'll leave it until it goes down. So I normally wouldn't have sold it until this purple candlestick here. So we could have made easily a couple of $1,000s, maybe even up to about 5,000 before I would have normally sold out. So just interesting to note that with the longer term look on Forex trading, it is normally a lot more profitable than just doing the short term 1 to 5 minute time frames. So thanks for watching, and I'll talk to you again soon. Bye.